Yesterday, the ECB announced the decision to keep monetary policy unchanged. Today, a report published in the Eurozone logged a jump in the inflation rate. Concerns of a rise in inflation are mounting in the UK as well. This review will disclose how inflation could affect the forex market. As we can see, the pound sterling is incurring losses despite strong macroeconomic results. The UK's mortgage lending soared by £9.5 billion, well above market expectations of £5.1 billion. Meanwhile, the number of mortgage approvals for house purchases in the UK decreased to 72.6 thousand from 74.2 in the previous months. In other words, the number of mortgage approvals is declining while net mortgage borrowing is rising. Such a trend in the mortgage market indicates that the share of expensive and luxury real estate is increasing, while the share of more affordable housing is declining. Generally speaking, the gap between the poor and the rich is widening. Meanwhile, more European and American economies consider this process to be the main cause of all economic and social problems that originate from the 2008 crisis. At the same time, consumer credit in the country increased just by £0.2 billion, missing market expectations of £0.8 billion. This, in turn, also reflects a decrease in the purchasing power of the bulk of the kingdom's population. Therefore, it comes as no surprise that investors are now more skeptical about the sterling. When the state of the British economy only raises concerns, the European one seems to be in a dreadful state. Inflation in the Eurozone jumped to 4.1% versus 3.4%, higher than market forecast of 3.7%, preliminary estimates show. Consumer prices in Europe are rising at an unprecedented pace, and the ECB does nothing about it, which spooks investors even more. Under such circumstances, the European regulator may have no other choice but to immediately raise interest rates. Clearly, the market will not be ready for it. Growing risks will be exerting tremendous pressure on the euro, and through the dollar index, other currencies will follow suit. Meanwhile, the Eurozone's GDP data coming in line with the forecast did not affect the market. Moreover, the economy expanded just by 3.7% following a 14.2% increase in the previous period, which could hardly be considered as a positive factor. Now, let's turn to the charts. Euro-USD got stuck in the range of 1.1585 and 1.1625 for the short while, but eventually broke through the upper boundary of the range. The speculative interest caused by the news environment pushed the euro 100 pips up against the US dollar. In our previous review, a trading strategy based on a breakout of one or other boundary of the established range was considered. Owing to this trading approach, it became possible to open long positions almost at the start of the upward trend. In the course of the initial bounce, Euro-USD approached the resistance of 1.1700, with traders cut off long positions, so the pair retraced. It can be assumed that sellers will be able to push the pair back towards 1.1625 because the euro is about approaching resistance. Speaking of the GBP-USD pair, an attempt to reverse the trend failed after the swing low as October 18 returned the price to the resistance of 1.3830. This resistance level keeps pressuring buyers. As a result, the quote may bounce, followed by the formation of a sideways channel in the range of 1.3730 and 1.3830. How is trading going to unfold in the short term? We will definitely tell you in our next video reviews. Don't miss them and stay up to date with the latest market news. See you!